Today, we're going to be focused on the liquidity grab trading strategy, and I'm going to give you a step-by-step guide on how to trade something like this. So this is going to work on both the upside and the downside. This is just a downside example. This is very much can easily be worked at the support levels as well. And so we're just going to focus here on a downside trade. And again, any markets. And so we get a lot of traders that are like, will this work on euro dollar? Will this work on Bitcoin? Will this work on Apple? Yes, it can work on pretty much any market out there, because institutions like to do this with anything that they get their hands on. And so the focal point that we will be looking at right here is this exact candle. So keep an eye on this candle, because this is the candle where a lot of people lost a lot of money on this chart. I'm actually not even sure what chart this is, but a lot of people lost money here. And so basically the idea is, for the liquidity grab, is you're going to start to see price bounce off of a resistance point. So this is the area where it was bouncing off of, and then it even goes sideways. So right here, if finally you can really start to see the bulls and the bears are fighting each other here. Right here is where it broke. Okay, so this is the area where it broke, and this is where everybody was going long. They were going shorts. They were just, everybody's just excited. They're saying, hey, this finally broke out of these levels. We're going to the upside. We're going to the upside. We're going up. And it actually, what happened, so this is in, let's keep in mind also, this is going to be on a daily chart, right? So this is a daily chart. This could work on other time frames, but this specific strategy, this specific type of trade, we're only going to be focused on a daily chart. So this is a single day. So it opened right here, and it eventually came down here, and then it came all the way up here. It grabbed. So this is the area where it grabbed everybody. This is the area where everybody lost a lot of money. So, and what it basically they did is they said, hey, we're going to the upside. So everybody's just they're getting stopped out. They're getting in positions. They're getting ready for it to go up. And what eventually happened is that the institutions are like, okay, we made our point. Let's bring this back down. So it actually brought it back down into this zone. So basically the step one is to be on the daily chart. Step two is to find an area of resistance or support. So this is a sell example. You could do the exact same thing in the other way. And then the next, what are we on step three? The very next step would be to, if your line gets broken and price breaks that, you're not trading that day. You were watching it. You're watching this thing go, and you're seeing that price come all the way up here. Just think about it. This is what the candle looked like, right? So if you see that, let's just think about it. If you see this candle, everybody's getting excited that we broke it and we're going long. So you're buying your options, you're buying your shares, you're buying, whatever, leveraged and this and that. And to the point where the institutions are, all right, well, let's go ahead and dump this. And so that's exactly what they did this day. And so, but we want to be smart money traders. And so what we'll do is, if you see this come down here back into the zone, the very next morning, you're going to get into position. So right here would be the entry. And then simply what you'll do for a stop loss, you'll just place your stop loss right above where this liquidity grab happened, right above it. And then you'll just do a 3 to 1. So this will be 1. And so this will be 3. And so what that means is basically we'll just go 1, 2, 3. And so that is kind of what the trades look like. I'm not the best drawer here, but essentially you'll just place your target somewhere down here. Or again, if this is flipped, you'll place it 3 to the upside. And that is a very short, quick example of a liquidity grab. This happens all the time. I could probably share it on a live chart here, but if that's something you would be interested in, let me know. I can actually even do some live analysis where we find, if we find something like this, we can share that. We actually do a lot of this kind of stuff as well in our Telegram. So make sure you go ahead and join our Telegram. That'll be linked in the description below. Completely free to join. And we share this kind of stuff all the time. Different trade ideas, different analysis and things like that. We would appreciate you to jump over there and join that. And yeah, that's it for me for this video. Hopefully that all was pretty, easy to understand, simple to understand, and just don't get yourself annihilated by some of these institutions, because this could be real lucrative to be trading. Like I said, that big, nice, juicy candle, we all see it. We've all seen that before. I'm going to draw it again because we've all seen this. We all know that, it's 3:30 p.m. and it just broke this, and then all of a sudden, this happens in 30 minutes. And so that happens a lot. That happens. Be careful. I always like to so if it breaks it and it did close up here, I always like that. That's a confirmation for the next day. So if the next open was up here, that is a good time to enter. That would be a actual buy trade. So, anyway, so that is the video, and hopefully you guys enjoyed it. If you did, make sure you give us a thumbs up. Like I said, join our Telegram. We share this kind of stuff all the time and more, and we appreciate you over there. All right, catch you in the next one.